With that, I'd like to welcome Alex Morsink from Equivesto. Welcome, Alex.
Hi, Craig. Thanks for having me.
It's great to have you. So, we have a lot of people here in the chat room, and you've got a lot to talk about. We were talking about equity crowdfunding at the beginning before people jumped on board, and I had a bunch of questions, but I know you're going to cover most of this. So, what I'd really like to do is for everyone who's in the chat room, everyone who is live, put your questions in the Q&A, put your questions in chat. We will get to them at the end of Alex's presentation because we did a quick walkthrough and there's a lot of information he covers and he might be answering it later in the presentation. But don't forget, just write your questions down. We'll be answering all at the end of the presentation. So without that, Alex, why don't we get started?
Perfect. Thank you, everyone, for joining us. Obviously, today is talking about what actually is equity crowdfunding and specifically how does that kind of fit in Canada. So let's just hop right in. Many of you have probably heard of a few other kinds of crowdfunding before, specifically donation-based or rewards-based crowdfunding. As the name suggests, donation is giving the funds in exchange just to support the cause or the business or the individual without getting anything in return. And reward-based is sort of like a Kickstarter model where you're putting in the funds and you're getting back a t-shirt, or you're able to pre-order the product or something like that. And so both of those models are quite successful internationally, and we've heard the names of many of the platforms that offer that. Equity crowdfunding is a little bit newer, and it's actually an opportunity where in exchange for the money you're giving to support the company, you're actually getting shares there in the business. So that's an exciting new development. But because you're issuing shares to the investors, there's a considerable change in the registration and the sort of legality around the whole process. So we'll talk about that as well today. So let's talk about the basics of equity crowdfunding and essentially how it works. So just like other models of crowdfunding, the idea is to grab a large pool of individuals and allow them to invest smaller amounts directly into your business. And in exchange, they get shares of your company. There's also a lending version of this, which is often called peer-to-peer lending. But that's not what I'll be discussing today. The focus of today is on equity crowdfunding. And so you're getting equity shares in exchange for your investment. And then the platform acts as the sort of middle of that and essentially helps connect the two groups, the companies looking to raise the capital and the investors looking to support the company and put in some funds. So as I mentioned, investors do actually get shares. So this is a big change from traditional types of funding and so the other types of crowdfunding. And the companies themselves can actually choose the type of shares that they want to issue when they're taking part in an equity crowdfunding campaign. I'll talk about sort of the shares that we might recommend or the most frequently type of shares that are issued, but companies do have the right to choose, and the investors are getting partial ownership shares in the company itself. And as I mentioned, they're often non-voting common shares. So that helps the investors participate and own shares and become partial owners, but it helps keep the control and management of the business with the existing founding shareholders. So where does equity crowdfunding sort of fit in the capital life cycle in Canada? So equity crowdfunding lets you raise up to 1.5 million per year for your startup. And so because of that cap in the maximum raise amount, it fits right in between the sort of family and friends round, which would come at the beginning where you're getting started and you really only have a concept, and the angel investors and the venture capitalists that come later on when you're raising, multiple millions. The angel investor round and equity crowdfunding does overlap for some of the larger crowdfunding raises, and you can go to either of those options for capital. But equity crowdfunding is really to help companies who are, you have your idea, you've built it out, you have a demo version of your product, and you're looking to get that first boost of capital and sort of make that launch and start generating some solid revenue. That's sort of where equity crowdfunding fits there. So I'm going to spend most of the time talking about equity crowdfunding and where that fits in Canada, but I wanted to give you a bit of a picture of what it looks like internationally as well. So while equity crowdfunding is relatively new in Canada, around the world, it's been in existence for some time. So in Israel, in the United States, and in the United Kingdom, equity crowdfunding is getting more and more established. It's been legal for almost 10 years in some of those places, and there's definitely a lot of interest, and there's been many successful raises. One example that we like to use of a company doing equity crowdfunding well in the UK is Crowdcube. So Crowdcube has been in existence for about 8 years, and well, actually this is a little bit old. The information is always changing every single day, but they've raised well over 500 million pounds for companies, and they've got almost 700,000 registered users, and they've raised for hundreds of companies over that period. So you can see that internationally, the UK, the US, Israel, many other countries are really embracing equity crowdfunding. It's still relatively new in Canada, and so we're still trying to, build that interest and let the market develop a little bit more, and hopefully it will grow and become more frequently used. So how does equity crowdfunding fit in Canada? So before going into specifically equity crowdfunding, I wanted to talk a little bit about sort of the Canadian sort of innovation space and the startup space and sort of what that looks like. So in general, Canadian investors are a little bit more conservative than investors in the United States, the UK, and other areas. And so there's a little bit less capital going to startups, and it's usually given at a bit of a later stage. So there's sort of a bit of a gap between that family and friends round that I talked about and the angel VC rounds, where companies do need access to capital at this stage, but there's not as much capital on offer for those sort of earlier, higher risk companies. However, on the flip side, there's definitely still a lot of innovative and exciting Canadian small businesses. Small businesses are really the driver of the economy, and more startups help build the economy and make it much stronger. There's also a lot of other funding options beyond just issuing shares to investors. So you can always go to banks for funding or through grants, but there's not as much capital available in Canada for sort of smaller businesses as there would be in the US or the UK. Let's talk about the history of equity crowdfunding and the rule changes that sort of allowed that to take place. So as I already mentioned, Canadian investors are a little bit shorter term in their focus, and there's not as much interest in higher risk companies like startups, though there is still some strong interest. And there's a lot of individuals who do, however, want to support and back exciting and innovative companies. And now with the change in the rules that allow equity crowdfunding, that is possible since 2016. So in 2016, the rules changed to allow equity crowdfunding. Everyone keeps saying that. I've said that a few times in this presentation. What does that really mean? So in Canada, securities are regulated by each province individually. So we're in Ontario, and the Ontario Securities Regulator is the Ontario Securities Commission. So all securities are regulated by the OSC. in Ontario, not just public securities. So even if you're going out to raise capital from investors privately, technically the way that you're issuing that equity and attracting those investors is technically regulated and covered by the Ontario Securities Commission. When a company goes public and issues on a stock exchange, they use a legal document called a prospectus to essentially outline the full details of their business and present this to the general public. And it has all sorts of disclosures and additional information there. And that helps provide all the information that's necessary for the regulator to review and sort of assess their offering. Private companies which aren't listing on a stock exchange can't meet the huge burden of creating a prospectus, and all the hundreds of thousands of dollars of costs related to building such a large and extensive document. And so we use what are called prospectus exemptions to avoid the requirement of issuing a full prospectus, but still able to raise capital. So even when you've gone out and raised money for your business privately, you've technically been using a prospectus exemption even if you haven't known it. There's an exemption called the private issuer exemption, which essentially allows businesses to go and raise capital from high net worth individuals and friends and family of the founders without needing to file any documentation or have any documents. And essentially, that's what all of us have been using to raise capital up until this point through traditional VC or angel investor funding. So even though we haven't known it, we've technically been regulated by the OSC this entire time. With equity crowdfunding, however, you can't use that private issuer exemption. And so in 2016, the OSC released what's called the crowdfunding exemption. So this was a new exemption that was created that created some new rules allowing companies to use equity crowdfunding to raise capital. But there are some restrictions around that, which we can talk about more. One additional challenge of having individual securities regulators in each province means that they don't always agree on what the rules look like. So currently, equity crowdfunding isn't even legal in every province and territory in Canada. Only certain provinces actually allow equity crowdfunding, and the rules for what is required, the maximum amount that can be raised, and the disclosure that's needed as part of equity crowdfunding is actually different in some of the different provinces that actually allow equity crowdfunding. So it's not even like you could go to BC and BC would have the same rules as Ontario, even though they both allow equity crowdfunding. However, which is really great news, all of the regulators are actually getting together and will potentially be releasing one unified set of equity crowdfunding rules that would cover all of their individual jurisdictions in Canada, which would potentially be released in 2021. But the regulators do take their time to make sure that they're able to meet with all the different stakeholders and understand the full implications of their new rules. And so I wouldn't necessarily hold my breath for the release of those rules right when we might want them to, but it's still a really great step that they are doing this. But currently, they're still quite fragmented by province. So who can actually participate as an investor in equity crowdfunding? Essentially, equity crowdfunding segments investors into two piles and has different rules and restrictions for each of those two piles. Traditionally, investors who could be participating in private startup investments like angel investors, like venture capitalists, they're categorized as what's called accredited investors. So they are high net worth individuals or companies with over $1 million in financial or investable assets, excluding their home. So that's how you determine what an accredited investor is, regardless of the prospectus exemption that you'll be using. So accredited investors are allowed to participate in equity crowdfunding. But both types of investors, even also accredited investors, do have maximum investment limits under equity crowdfunding. That is included in the rules provided by the regulator. So the maximum investment per accredited investor per company is $25,000, and the maximum investments per year in all equity crowdfunding deals is $50,000. So the second bucket of investors, the most exciting bucket, the new bucket that is really why I think we're all here, is the retail investors. So essentially, there's no financial restrictions around being a retail investor for equity crowdfunding. As long as you're the age of majority, so you're over 18, you're actually eligible to participate in equity crowdfunding. And you still have investment limits as well, of course. So for retail investors, the maximum investment per company per year is $2,500, and the maximum investments in equity crowdfunding for the entire year is $10,000. And the idea behind these limits is so that the government and the regulators can make sure that individuals are not sort of overexposing themselves to higher risk, though higher potential, but definitely still higher risk investment opportunities. There's some concern that individuals would, put companies up that would be really exciting and really innovative and would really entice people to participate. And there would be, without limits like this, there would be potential for someone to, get very excited in an idea, put too much money into that company, and for whatever reason, if the company wasn't successful, then that person would have lost a lot of money. So because retail investors aren't the accredited investors, they don't have that $1 million of investable assets, the feeling is we want to make sure that these people are limited so that even if everything is lost that they invested through equity crowdfunding, they still are financially secure. They haven't, remortgaged their house or lost their shirt investing in equity crowdfunding. And the onus is actually on the platforms themselves, the regulated platforms, to take the time to review each investor when they're signing up and to make sure that equity crowdfunding is suitable for that person. They understand the risks involved and they are comfortable with and understand the right amounts that they should be investing for their own individual scenario. And so that's a responsibility that the platforms take very seriously. So the other side, the companies, who can participate in equity crowdfunding? So as I mentioned, the maximum raise using the equity crowdfunding exemption is 1.5 million each year. So each calendar year, companies can raise up to the 1.5 million. The companies do need to be, based in Canada, and we highly recommend that they're incorporated. Technically, the company could be a partnership. It wouldn't necessarily need to be incorporated, but that can make things very complicated. So we would highly recommend that the business be incorporated as opposed to a partnership. With equity crowdfunding, and specifically using the crowdfunding exemption, it's possible to raise without using audited statements. Using other exemptions and certainly issuing a prospectus and going public, companies are required to provide audited annual financial statements. But with the equity crowdfunding, it's possible to use only accountant prepared notice to reader statements. And so they're much cheaper to prepare. Usually they're actually prepared by most of us as part of just our annual tax filing anyways. And so the burden in terms of cost and time to prepare is much less because it's possible to use the notice to reader statements. Generally, companies are also required to have basically a minimum viable product or a demo version of their product or service before raising, but they don't need to have revenue. So you can't just come with an idea. If you just have an idea, then you should actually go and work with Craig on his ideation workshop and make sure you have product market fit and all that stuff. Once you've got that, you've actually built your your service or your product to a sort of demonstratable point, that's a great opportunity to consider equity crowdfunding. What are the ongoing requirements? So I've done all this work. I'm thinking about equity crowdfunding, but I'm worried about what I'm going to need to do after equity crowdfunding. You know, I've got all these new shareholders now. What does that look like? So in terms of ongoing requirements, essentially there are some new requirements compared to before, but they're not as intense or strenuous as we might think. So already, as required by regulation, you need to have an annual shareholders meeting. That's already a requirement. So that requirement stays after you've run an equity crowdfunding round. You would need to invite all of the shareholders to that meeting, but we would recommend you sort of do it by webinar, just like this. You create a presentation, and you don't necessarily allow immediate sort of engagement and discussion during the meeting. You could open it for questions afterwards, but you would need to have an annual shareholders meeting. You also need to continue to provide those accountant prepared financial statements each year. And you would generally, as I mentioned, prepare those as part of your tax filing anyways. So that's not a massive additional burden. Often you can have those prepared for a few $1,000s, much less than, you know, audited statements, which can cost starting at $25,000. So much less, usually less than $5,000 Canadian. Then you also need to provide those to the shareholders, which you would need to do generally as per your existing shareholders agreement. So you would do that as part of your annual shareholders meeting. And you also need to update the securities regulator and your existing shareholders if you're raising capital in the future, or if there's been a large change in business operations. For example, you've done a massive pivot, or you decided to shut down the business or anything like that. So there isn't a sort of massive additional amount of work that's required after doing an equity crowdfunding round. In other future presentations, we'll talk about sort of what we recommend you do to sort of help stay connected with your shareholders and everything, but the requirements are not extremely strenuous. Which businesses work best for equity crowdfunding? So as I'm sure you can sort of surmise, equity crowdfunding is really about allowing the crowd to participate in investing in your business. And really, the more that you can captivate and bring in that crowd, the more successful your round will be. So often businesses that already have a strong community focus, like restaurants, shops, or community centers, are already positioned well where they have an active community that are interested in participating and sort of supporting them. Also, having an exciting idea that captures the imagination, that is also a really great sort of business model that's going to work well with equity crowdfunding. If you have a lot of followers and social connections already, that's definitely going to be an asset, but that's not something that's required when going out to do equity crowdfunding. As long as you have an idea that's exciting and you can really sort of capture the imaginations of people, that's really going to help. It doesn't need to be actually a consumer focused business. It's possible to do equity crowdfunding even if you have a business, a B2B model. It's just important that you frame your idea and your concept, emphasizing the sort of positive impact of it and the innovative approach. Companies that don't work as well for equity crowdfunding are companies where the value of the business is tied to a small number of employees. For example, if you have a consulting firm, it's a bit harder to go and equity crowdfund that kind of business, because if you and those key employees were to leave and sell your shares, there isn't a lot of intrinsic value remaining in the business. So a business model where the business itself has some considerable intellectual property or IP, that's really helpful for equity crowdfunding. Again, Craig has some great presentations with, I believe, Alex from Insight Legal about IP and preparing understanding IP law and everything. So definitely check back with Craig on that. So also, businesses that won't necessarily work as well is if you are a sort of highly technical B2B focused business model. So as the business is more technical and less sort of easy to explain to the general public, it may be less successful with equity crowdfunding, but that's not any sort of guarantee. So it still might work, but you're not in as positive a position as a company that already has a strong sort of community focus. How can I get started with equity crowdfunding? You know, this has been an interesting presentation and it seems useful. So, okay, I want to get involved. What are the sort of next steps? So the first thing would be to make sure to prepare and have your documentation ready about your business. And I'll talk actually about that on the next slide. Also, you want to think about how to present and frame your business. You want to have a clear plan around how you can emphasize the positive impact of your business. You can make it approachable and just a great story that people want to connect with and want to follow what you're up to. And then you can also use that story to build and grow your community. So connecting with individuals, your customers, your suppliers, people who live and work near you, friends, people who are excited by what you're doing, who want to follow along, who want to get involved. Building that community online definitely is a great way to prepare for a crowdfunding campaign, because each one of those individuals is a potential future investor. The next step would be to review the requirements. So different equity crowdfunding platforms, and depending on the jurisdiction you're in, will have different requirements to apply and potentially list on their platforms. So I definitely recommend, once you've sort of built your business and you're growing your community, to have a look at what those requirements are and do some of the preparations for those requirements. And then of course, you can just apply to any of the platforms to find one that fits for you. So I've mentioned reviewing the requirements, and I've mentioned preparing documentation, but what is the documentation? So for Equivesto, this is a list of documents that we would like you to have ready when coming to talk to us about equity crowdfunding. So your certificate of incorporation, your capitalization table, your organizational chart if there's multiple businesses, your business plan, a pitch deck, financial statements, so those notice to reader financial statements that we mentioned earlier, your shareholders agreement, your financial projections, 5 years is usually what we'd like to see, and an outline of the amount you'd like to raise on equity crowdfunding and the purpose of those funds. So that sort of covers the list of documents that we would like to see when someone's applying to us. We'll also work with you to, ask more questions and build out your story and gathering more information as part of our due diligence process. But this is the great stuff to have before coming in and talking to us. And you can learn more about all of these things at equivesto.com/learn. But that sort of ends my presentation for now. Thank you very much for listening, and I'm looking forward to going through all of your questions. You're muted.
Sorry,
Craig.
I'm muted. Yeah, I was fighting the button there. That was great, Alex. I appreciate that. We have a few questions I got here, and we have a bunch of people in our chat room starting to ask questions now. So I'll get right to it. There was one question quickly near the end about what is a capital chart.
Perfect. What is a capitalization table? So a cap table is essentially a document that outlines who all of the shareholders are in your company, the amount of shares they have, the total number of shares in existence for the company, the amount that each of those individuals paid for the shares, the class of shares that they own, all sorts of information like that. If you're interested in setting up a cap table for the first time, there's actually a free digital cap table website piece of software that we would suggest that you look at. It's captable.io, captable.io. And essentially, you can go and put a whole digital cap table into existence there. You can invite investors via email to view and sort of control their shares. And just by sort of setting up one there, it structures it all for you and makes it pretty clear. And you can export, Excel files, the Excel cap table from that as well. So we would recommend using that free software if you're trying to build a cap table for the first time.
I put the link to that website in the chat room there. I know people were asking for it, for you to repeat it, but it's in the chat room there. It's captable.io.
Thanks, Greg.
Yeah, and I'm trying to stay on top of these as we reference them so people can take a look. How long does it take to prepare for an equity crowdfunding launch? You talked about all this documentation. So leading up to launch, how long does it take to get all this stuff prepared?
Right. So it's different for each platform that does equity crowdfunding. So in terms of getting the documents ready on your end before you've come and talked to us, it can take a couple of months just to sort of prepare your business plan and everything. But let's assume that you've already got all your documents ready. It's possible to actually go from meeting us for the first time to launching your campaign in as little as a month. It really depends on how available you and your team are, how possible and willing you are to sort of work with us in preparing the documents that we need. But usually it can be as short as a month, but it often ends up being 6 to 8 weeks. Because usually there's some marketing and outreach and things that people need to do before the campaign actually launches. And so ideally we would want to sort of begin the discussion with you and sort of get things organized for a few weeks and then launch that sort of 1 month of ramp up, which would then lead up to your campaign launching. Campaigns can run up to a maximum of 90 days. So the campaign can run up to the 90 days, but if you reach your funding target before the 90 days, then the campaign would end at that time.
Great. And so speaking of length of campaigns, how long is a typical campaign? I've heard and I've read that shorter campaigns are usually better, 30 to 45 days. Versus longer campaigns, but I don't know, how long should they be?
Yeah, so usually 45 days is around about the sweet spot. It's really important when you launch your campaign, and this is part of the strategy work that sort of we would work with you and sort of plan out before launching the campaign. But it's quite important to have a really strong launch to the campaign. So usually you want to try to get a good portion of that funding within a few days of actually starting the campaign to show investors that aren't directly related to your business that you do have that momentum and there is a lot of interest. So that lead up to the beginning of the campaign is important to sort of activate your community and get their involvement right away. Once you sort of have that, if that sort of continues and you have good momentum, oftentimes the campaign will be shorter. But 45 days is generally kind of the sweet spot for our campaigns.
So we've got a few questions here. So how does Equivesto connect businesses to potential investors outside of their own existing community followers? I know most people who are successful at equity crowdfunding bring most of the investors to the table themselves. But how do you handle that at Equivesto?
That's a great question. So traditionally, if you look sort of on average internationally, a successful equity crowdfunding campaign, about 70% of the investors will come from the company's existing community, and about 30% of them will come from the platform. The deal itself is hosted on the platform. So Equivesto is a platform. And once people are signed up as investors, they can come and see the deal there. Part of the regulation is that there's not supposed to be information about the deal itself anywhere other than the platform, where we can sort of control and make it clear what, what is actually involved and not involved in the deal. So investors go to the platform to see the deal there. But we also do a lot of work to help broaden the interest in the company raising on the platform as well. So we have our existing network of investors who obviously get notified when campaigns are going, but we also leverage our own social media and our own marketing to try to drive interest in both our platform and the deals that are offered on Equivesto. We basically, in terms of the pricing and where we make our return, we have an application fee of $1,000 when companies are signing up, and that's to cover some of the costs of running the due diligence and to make sure that companies are serious. But that doesn't cover even half of the costs that we go through to do the due diligence. Equivesto also takes 7% of the successful raise amount as our sort of brokerage success fee. So in that scenario, if the deal is successful, we take 7% of the capital raised. But if the deal is not successful, then we don't take any fees. And so based on the structure there, there's clear incentive from us to make sure that, if we approve you and you're setting up a campaign on the platform, there's definitely an incentive to make sure that your campaign is successful.
So where is the campaign posted for investors to find?
Yeah, so the campaign is posted on the portal itself. As I mentioned, you can't post details about the campaign on sort of any of your personal websites, but you can make references and direct people to the campaign, which would be hosted on equivesto.com. So the investors would come and sign up, and then they would be able to see all of the deals on the platform, including yours.
Can a company based out of the U.S. apply for equity crowdfunding only if they partner with a company based out of Canada?
So there's lots of equity crowdfunding platforms in the United States. If your parent company is incorporated and operating in the United States, I would highly recommend that you look at using one of those companies. It's generally challenging to go through an equity crowdfunding round and not have the investors invest at the parent level. Usually they want to be in at the top and not sort of coming in at one of the child companies. So I would highly recommend, if you're a US based company, to do equity crowdfunding in the US.
Is the investor share value based on pre-invested value or post-money value after Equivesto takes their cut? So it sounds like there's a couple of questions here, and the Equivesto taking their cut is the percentage of the raise, not necessarily.
Yeah.
Okay.
Yeah. So when the investor is putting in their money, let's say it's $100. So the investor invests $100, and the $100 goes to basically and is exchanged with $100 worth of shares. So the investor puts in $100, they get $100 worth of shares. The company issues $100 worth of shares, but only gets $93 in this example. So the value of the company and the calculation of the value is based on the pricing of the shares and the number of shares being issued. But then basically it's seen as, okay, the company is receiving this amount of investment, and so they get the full million or whatever it is, and then the company pays an expense, and then that's where the money comes to Equivesto. So in terms of how it looks on a sort of cap table or on a sort of total raise amount, if you do a round for $1 million, it's not that you actually only raised $930,000. You raised $1 million and then you paid $70,000 to Equivesto.
Great. I think you covered that. So I wanted to go back and the typical when giving getting a VC to invest, it can take 6 months or to a year, even after you set up the agreement, to do due diligence and for the deal
Right.
to finally be done and me to actually get the cash as a startup. How long
Definitely.
is that cycle from an equity crowdfunding point of view?
So that's a fantastic question, Craig. So as we sort of mentioned, how long does it take to prepare the campaign? Usually it takes 6 to 8 weeks to prepare the campaign. The campaign could last up to 90 days. And then essentially within 1 or 2 weeks after the campaign ends, we deal with the last of the financial disclosures, and then the funds are transferred to you. So going with a VC can take 6 months to a year. Equity crowdfunding can be potentially as short as 4 months, but usually between 4 and 6 months from sort of engaging with us, preparing it and everything to the end. One of the main differences also is when the campaign is running, you're doing marketing and everything, but you're not spending a lot of your time going out and actually pitching investors. You pitch them once, we recorded the video, it's all structured in the campaign, and that campaign is running, so you can actually be focusing on the business while raising the money.
So Erwin's got a question here about share value. Can the company have 100 million shares at 0.0001 cent and give shares out from this?
So technically, yes, you can have as many shares as you'd like your company to have, and it can be as granular as you would like it to be. Generally, on our platform, the minimum dollar investment is $100. So if a person's getting $100, then they'll be getting, I don't know, 10,000 shares or whatever it is based on that number of cents. You could have 1 trillion shares if you wanted. It's really, I think there's not really a reason to have that many, but if you really wanted to, you could.
There are some rules in the U.S., and I don't know about Canada, about when you have over a certain number of shareholders in your company, there's different rules that apply. Is that the same here?
Yeah, so I made reference to earlier in the presentation something called the private issuer exemption. So that's basically the exemption that people are able to use to just raise money quietly without having to talk to the regulator at all. Part of what makes you eligible to use that private issuer exemption is having 50 shareholders or less. So once you raise with equity crowdfunding, you can't use the private issuer exemption anymore, but you can still use other exemptions like the accredited investor exemption, which is what you would use to go and raise from an angel group or a VC group in the future. So there isn't actually a limit on the number of shareholders your private company can have. The limit is on the number of shareholders you can have using this, what's called the private issuer exemption, to raise capital.
So we have another question you're going to kind of have to decode a little bit here. What
Yeah.
is the ratio of shares to investment cash?
That is an interesting question. I'm not sure exactly what exactly, Erwin, you're asking. So maybe if you wouldn't mind rephrasing the question, that would be a little bit helpful. I think you're wondering what ends up being the price per share, and that is actually determined on a company by company basis. So depending on the valuation of the company, the number of shares that you plan on issuing, those two numbers come together to determine the actual the value per share. And that's something that we would calculate and assist the companies to calculate as part of our engagement.
And that would probably also be based on, when you talk about ratio to cash investment, I think it's more specific question to be ratio of investment to ownership. And I guess that has to do with your valuation.
Again, exactly. That's totally to do with your valuation. So you have the number of shares that exist in the company. The value, the number of shares, it's not a fixed value, right? The value of your shares can change all the time. And so it's not like every share is always worth $1. So if I issue 100 million shares, my company's worth $100 million. That's not how that works. The company value is based on the value of the company, the financial statements, the future projections, the quality of the team, everything like that. So the first step is having really good financial projections and having thought through all of that. Based on the financial projections, then we would create a valuation with you that everyone thinks is fair for your company. Once we have the valuation, then essentially we look at the number of shares that are being issued to the company, and you basically divide the valuation by the number of shares, and that's the price per share. And then you look at the amount of money you want to raise, and you can then also calculate what % of the company you need to be giving up in order to raise that money using that same price per share ratio.
All right, so I've got one quick question, and then I'm going to break a couple of these questions into one, hopefully. Is Equivesto a licensed broker-dealer in Ontario?
Yes, George, that's a great question. Equivesto is licensed. Equivesto has a child company called Equivesto Canada Inc., and that company is licensed as what's called an exempt market dealer in Ontario. So that license allows us to actually operate the equity crowdfunding platform and use those different prospectus exemptions that I refer to raise capital. So an important thing for everyone to note is any platform that's doing equity crowdfunding needs to be licensed by the Ontario Securities Commission if they're operating in Ontario. You can go to, hold on, I can write it in here, are they registered.ca, I think, and you can look up me, you can look up Equivesto Canada Inc., you can look up any other company that's doing equity crowdfunding, and if they're not on this website, then I would highly recommend not working with them because there's a likelihood that they're doing it illegally. You definitely have to be registered with the OSC to do equity crowdfunding currently.
All right, so we've got a couple of questions that I'm going to try and put together here. So we have a company here that's worth $30 million based on potential. Let's just say they've got some valuation that says they're worth $30 million.
Yeah.
And they want to keep control. And they want to raise 1.5 million USD. How many shares would they need to give up to do that?
Right. Okay. So let's back up a little bit. When a company comes to work with Equivesto, I'm sorry, but we're not going to just take the valuation that you tell me your company's worth and sort of work off that. We work with you to actually calculate a fair valuation when you start working with us. We have a very structured way of doing this. I've actually given presentations to CPA Ontario with Craig about how to do this and the steps we take. And I'm sure we'll do another presentation about this at some point. But we calculate the actual value of the company together. And once you have that calculation, then it's really a ratio between the amount of money you want to raise to achieve your goals. If your company's worth 30 million, but you need 20 million, then you're going to have to give up 66.66% of your company to get that 20 million to do what you want to do, if the valuation is calculated at a post-money valuation. Usually when we work with companies, the number we're calculating is the post-money. We're assuming, okay, you've raised this money to go out and do all these great things in your projections, in your goals. So now, how much money do you need to raise to actually achieve those? So I'm seeing Erwin is asking a bit more. So if you wanted to raise, the 1.5 million is actually in Canadian because we're a Canadian platform. So if you wanted to raise 1.5 million USD, you couldn't do that in 1 year. It'd need to be less. I think the exchange rate would put it about 1.2 million USD right now. But if you wanted to raise 1.5 million Canadian, again, the number of shares that you need to give up is entirely dependent on the value of the company. It's a straight ratio. So in this example, if your company was valued at 30 million and you wanted to raise 1.5 million, then it's just 1.5 out of 30. That's how much control you need to give up in the company. But again, definitely worth recommending. With equity crowdfunding, most companies are actually issuing non-voting common shares. So because they're non-voting, you're not giving up actually any control in the business. You're giving up some shares of the company. These people are investors, but they don't have the voting part. And voting is actually how shareholders exercise control. So at shareholder meetings, the shareholders vote and determine who's going to be on the board of directors. And the board of directors are the individuals that control the business. They hire the CEO. They make the decisions about, what the company does and how they do it. And so without the voting rights, the investors are there to support the business. They're believing in it. They would take some of, any sort of dividends or payouts when the business is sold, but they don't have voting rights. So they're not actually taking control away from you. I hope that sort of answers the question a little bit more.
Yeah. Quick question here because I'm mentioning in the chat room here office hours that we're running on July 17th and July 31st.
Yeah.
So can you just tell people what that looks like, and then we'll get to the next questions.
Sure. So we're offering office hours, as you mentioned, on the 17th and the 31st of July. Essentially, it's a half an hour slot available to each person who signs up. We're doing them for a number of hours in the afternoon on both of those days. And it's an opportunity for you to get some one-on-one time with someone from Equivesto who can, answer any questions you might have related to your business, equity crowdfunding, how it works, and sort of any questions you might have related to getting involved. So feel free to, once we post the link, to sign up there.
So I wanted to ask a question. If you do have no investors to bring to the platform, is it even worth while to do crowdfunding? First of all, before I throw that over to you,
Yeah.
I wanted to say, well, we're redefining what an investor is here.
Right.
Because I could be an investor, you could be an investor. And what's the minimum investment for an investor to make on your platform?
The minimum investment is $100.
So anybody can be an investor. Sure. So you're not
Yes.
necessarily talking about bringing angels or VCs or having to bring them to the platform. So
Exactly.
having said that, not having investors, and I just want to throw this over to you now as we had that conversation.
Right.
If you don't have any investors lined up, is it worth going on a crowdfunding platform?
Well, if you don't know a single person who is interested or excited by the company that you're working on and things like that, it's mostly likely that even when you speak to an equity crowdfunding platform, before they even let you sign up or do anything like that, they would probably tell you that you probably want to grow your community and your social presence first before trying to run a campaign. If you don't have anyone who would want to participate or thinks what you're doing is exciting, then I would definitely recommend spending some time to do more community outreach and express all the great things that your company is doing to the community on social media or wherever, and build that following a little bit before trying to do equity crowdfunding. It's definitely exceptionally difficult to try to do equity crowdfunding without your own community to invite to participate.
Now, having said that, I also believe that people can use equity crowdfunding as a strategic marketing and a strategic growth
Definitely.
initiative, meaning that the people, if you can start gathering community around a cause or a product or a thing that you're offering, and they'll invest. They're willing to give you $100 or $1,000, and you can get 1,000 of those people investing in you. Those are going to be your evangelists. Those are going to be people who will continue to market and talk about your product and give you blessing moving forward. And those are probably not the best words in these days, what Seth Godin would call sneezers in his Purple Cow book, where they're spreading the word around. So I would say that sometimes equity crowdfunding is a great way to determine the crowd and build that community and get that loyalty for your earliest adopters.
Yeah.
So is Equivesto is launching, are you guys launching your first companies in August? Is that what's happening?
Yes, so I noticed a question from George, I think asking, oh, where can we see companies that have
Yeah.
raised already through Equivesto? And so Equivesto is actually launching our first group of companies in August. And so that's when you'll see the companies. We haven't run any companies yet. We've been building and preparing honestly for the last 4 years. So it's been a long time. Craig's seen me hanging out at his startup drinks for many a month. And we're really excited to actually get launched and start helping companies in the Toronto startup space.
Yeah, and it's been great working with you and the team at Equivesto for the last couple of years, helping mentor startups, and talking about valuations, and working with me with with organizations like CPA Ontario and others to make this happen, and some of the FFCon and
Hmm.
all many of the other pitch competitions and other things. There's so many stuff we've done. It
Yeah,
all
it's
blurs
been
together. So.
been a long time. Yeah.
Yeah, and George was asking about the companies you guys launching on Thursday. Now, I think we are, yeah, one more question. Do you have any suggestions of equity funding companies in the US?
There's a whole pile of great ones. I'll just name off a few that are quite large. There's Seed Invest. There's WeFunder, which is very big. There's one that's also called Republic, which is very good. There's a whole list of them. And honestly, just typing Equity Crowdfunding USA, a whole big list of them will show up. They all have similar but different application requirements and pricing. So if you're thinking about equity crowdfunding in the US or even in Canada, make sure to review all the different options and read about sort of what you can do there.
And I really appreciate your time today, Alex. I think we got to all the sessions. If you in the chat room, if you enjoyed it, please feel free to give us a 5-star review on Google. I just put the link in chat room. It just kind of helps people find us so more people can get the information. I will be sending out the links to all the upcoming crowdfunding events, the office hours, and some of the other stuff I mentioned, so people will, so you'll have that information. Any parting words for our community, Alex?
Thank you everyone for joining, and I appreciate talking to you about equity crowdfunding and what it is. Feel free to follow us at Equivesto on all the different channels and check us out at equivesto.com. We'd love to hear from you.
And I do have one more question. I'm sorry, I just threw it in there. I missed it. Can a company, and I don't believe this
Mm.
is true, so can a company have a perpetual listing on Equivesto?
No, so companies are limited to basically offering their company for investment in a sort of campaign style. So you could have at the most the company on there for 90 days. If the company, based on the rules, if the company, for example, was listed forever, then you would never actually get your funds, because only when the campaign closes can we assess if you met the minimum raise amount, and then is the funds released to the company. So if the company was listed perpetually, that doesn't really work. So I think the most that you could do is individually list a series of times, but then again, you're going to hit the maximum annual raise amount of 1.5 million per year doing that. So you could essentially just keep listing your company again and again if you wanted, but generally, if you list and you're not able to achieve your goal, it would make most sense to sort of step back, reevaluate, work with us to sort of build your community so that the next time you go out, you would hit your goal.
And because you're still here, next week we're talking about running a successful crowdfunding campaign. Can you
Yeah.
just give us the highlights of some things we're going to talk about?
Yeah, so we're going to talk about, as we've alluded to a little bit in this presentation, we're going to talk about the different things you can do to sort of prepare your company, the way you want to try to frame your campaign, how to engage with people who might want to be participating in your campaign, and just sort of building that community and activating it when you're running the campaign.
Yeah, I really look forward to it. So hopefully we'll see you all next week. And thanks again for taking the time today, Alex, and we'll talk to you soon.
Thanks, Craig. Bye.